Alright, hindsight for Euro USD for Thursday. Let us begin. What we're gonna do first, we're actually just gonna take away everything and start back on the weekly, identifying what's happening and why, what we have liquidated out of. Why we're doing this, mainly so we can stay consistent in what is happening, but also slightly clean the chart, to be honest. That's the weekly high that was taken, and from that we had, or not from that specifically, but coming leading up to that area, we had a nice bullish trend after liquidating these lows over here. So we know that this area price took liquidity and breaking this high, well, not that high, this high here, was the more significant momentum shift, but mainly that being, once again, liquidity. So we took two liquidity highs, essentially a recent high, relatively recent June high, as well as a couple years, a year ago high, meaning we had like strong, fairly darn strong liquidity, as well as cause. A reason for price to actually go lower is cause, that being stack lows. We have liquidity down at the bottom. What happens when we break this low here? We have a momentum shift. We actually have a double character shift, change of character, being the initial shift, liquidating all of these lows out of the buy to sell over here, or you can say refined buy to sell, because that's where price mitigated, and then a second momentum shift that's currently in play. Price switches back up into this buy to sell that saw a break of structure and liquidity left, making it a valid POI. Moving back in, what does price want to target inside the POI? Liquidity. Where's liquidity? This high over here. That there was our liquidity high, and indeed it was liquidated. This over here was our liquidity high, and indeed it was liquidated. Going down to the 4 hour, we can identify how price actually pushed up and liquidated that liquidity high. So we know over here we got a change of character by the blue, let's do that, by the red blocks, rather by the orange box. We got that change of character, and then what happened, price was bullish, creating a low high, low high. That bullish trend towards upside, leading to that liquidation of that high. So we can just refine, or not refine, but identify that internal fractal structure with our blue dots, seeing where price is going and how price is really moving. We can align ourselves with the market structure, so we can ensure we're not actually trading against the trend. And what do we get? And see a break of structure down here, making it a bit clearer. This is the high break in structure, equal highs. Eventually we break again, ultimately not only liquidating these highs but liquidating equal highs again. But how do we break those equal highs? On the 4 hour, we just wick the liquidity, we close below, and we see a bearish initiation towards the downside on the lower time frame. Yes, it's a doji candle, but this is a bearish initiation before a push back up, seeing a mitigation inside of this area and sell side just from 3 candles. We will go deeper and be much clearer, say on the 15-minute. But first, we want to see what happened. We broke structure towards the downside. Meaning what? We can possibly then look for a sell setup. Why? When we break structure? Because now price has taken liquidity and shown us intention where price wants to really go. After breaking structure, what can we identify? Order block or the most recent buy to sell that saw that break of structure, as well as liquidation to the left. So we know this area has liquidity, and that liquidity caused price to break structure once again. Not only one low, but 2 lows were actually liquidated, which is very important to note, because we know in the future this low would also obviously be targeted. But before we get there, we know what happened in this area, change of character, and we know Wednesday we had a strong bearish initiation. Pulling back into Wednesday's New York session, we could have gotten a fantastic sell setup. Going down to the 15 minutes, we can refine our price and then identify what? Identify our liquidity, identify where is the strongest high that actually saw, we're identifying liquidity within the initial push down, which is the green block over here. That is turquoise or cyan or whatever. Identifying the green block over here, meaning these highs here is what I want to see liquidate. For why? Because for every change of character we need liquidity. For every entry we need liquidity and change of character. And what do we get inside this area? We get that change of character after taking what? Liquidity. So you go down to the 15 minute. If price can load, and we know that what happened, we had a low, a high, a new low, and a new high, showing us is in that bearish narrative. But our fractal low for a real or proper change of character is over here. So what can we look for instead? A double change of character. How does that look? We create a high, we create a low, we create a new high, we create a new low. What does that tell me? Price has now shifted momentum. And what has price done in doing so? We created new highs, or not, rather I would say low, high. This is now the most recent high that saw the most recent low. And what does price do? We build liquidity. Low, high, high, low, change the color to green, because now this is the interfractal structure of the inside structure. So 5 minute structure. We got a new high, a new low, a new high, a new low, a new high. And what does that new high see? We see liquidation. But price doesn't see a spike down. Why? Because these highs don't really have liquidity. We see a new low. Now we see what happens to price. Price spikes down, takes liquidity, and then spikes back up. Going down to 1 minute, we could possibly see again deeper, which obviously we don't have to go to the 1 minute for setups, but this just proves my point that, not proves my point, but it becomes much clearer. These highs here hasn't taken any low, meaning there is no liquidity above these highs. But the moment this high liquidates an actual structural low inside fractal structure, which is this low here, that means there is liquidity above this high. And what does price do after liquidating these lows? We spike back up to liquidate this high, and this high is, which is the blue dot, which is now a structural high, lower time frame structural high, gets respected. Price comes back, obviously it might even liquidate this high, but ultimately what would we possibly do? We would just take liquidity and see a spike down, an impulse down. Why? Because price now has the volume to actually see that bearish initiation. And if you don't get into that narrative, going back up to the 5 minute or even the 15, so going down to the 15 minute, we can identify what this becomes our new lower high, and this low becomes our new lower low. And what is that again? That is a buy to sell towards the downside, a second entry. So in New York alone, there was, which one? This one. Yes, there was an entry here, hindsight, because it's in hindsight, somewhere over there. And there was another entry on the 15 minute over here, possibly say on the candle break, or even on the tap of the zone, the POI, because it's a valid area to see a sell side narrative, because you're trading with the trend, ideally obviously executing where there's liquidity. So I'll possibly look around this range here to see it liquidated, but you get the idea. Somewhere around here, safe stop loss above the high, targeting our 3.2 or whatever you want to risk. Ultimately you just target the low. But this one here is fantastic, right? Obviously, because you're gonna have the tight stop loss, your 3 pips, whatever, and your magical 200 risk to reward, whatever. But those are possible setups going into what is happening in price and reading the candles in the moment. That is what the skill you need to learn in order to stay and be consistent. But taking this away for a moment, because it's just messing up our chart. Not really messing it up, but it's really dirty. Going back up to the 50-minute to look at today's price action, because really we were just focusing on Wednesday, and on Wednesday alone there was significant order that could have been taken. We had the low, we had the high, and then what did we have? That low break, the new high, and the new low. So we know price is following a bearish trend, bearish narrative. And what do we know after price takes liquidity on this low? We would possibly then want to take liquidity on the initial push to see sell side continuation, because what does price do over here? We see a bullish change of character. One new low, new high, new low, new high. A double change of character in terms of structure, showing us price does indeed want to see buy side continuation. And then there was a setup here in New York. I mean not New York, sorry, Asia. Beautiful setup. I don't trade Asia, but that's clear and obvious. Why is it clear and obvious? Because price shifted not once but twice. And what is this? Liquidity. Very simple, because now you're trading with the trend. What would have further added on? I think over here, let's not go into that. You're gonna have to pay me for that. New low, I'm sorry, new high, new low. What can we apply? Fibonacci and refine it to location, identifying premium price, identifying discount price, where we want to sell price, where we want to buy price. And we can see from this low to high, this was a fantastic area to do what? Buy price. And this is a fantastic area to do what? Sell price. And what can we identify in the initial push, which is the green box? We can identify our liquidity high. Why is this the liquidity high? Because this is the only significant high that saw these lows, or the first slowdown, price slowing down before actually liquidating this high. Because if price did not slow down, if this was one move, we would possibly just take these highs here, for example. But this is the first area where early sellers become interested, placing their stop losses above the high, such as this stop loss above the high, and then they do what happens? They get liquidated. And what happens with that liquidity? All of that. They get essentially disrespected. But what can we do to avoid being liquidity? Identify the buy to sell, identify the POI, or just premium price. Essentially that's our new supply zone that we want to focus on. And what do? Identify that liquidity. What is price going to, what is price targeting, and why, which is the purple line. Let's actually make it yellow for this narrative or illustration. And what else can we identify? Structure, internal structure. Once again, let's go to our green dots. We had a new high, low, high. This is the low, this is the high. Fractally, what is happening? We have a low, we have a high, we have a low. What does price people think is going to happen now? Oh, price shifted, right? Wrong. You think price shifted a double change of character. You execute, say, somewhere here, your stop loss above there, and you get absolutely rocked. Why? Because you have to focus on what's happening inside of price rather than understanding the higher time frame narrative. And that is a big issue. That was my issue as well at a certain point, that I'm trying to continuously work on. So internal structure, new high, and this becomes the next fractal high that price would want to target. We have a low, high, a new low, and then a new high. Why am I marking this as a new high even though it doesn't break the wicks? Because price actually closes above the previous close, so I'll respect it. new low, basically a new high, new low, new high, and then what happens inside of this area. This is once again that SMT, or that area where we expect price to actually entice early sellers. So you can go down to your time frame, slow time frame, your 5-minute chart, and I just continuously to follow price until you get that change of character, that liquidity first, and that change of character. You have a high, you have a low, you have a high, and then what does price do? We wick all of these stack lows with this candle here, but ultimately we still close over there. And then what happens? With all of this liquidity gone, there's only this here. And then price does what? We take liquidity, we create a new low, and then we close above, again a new high. But what are we also doing from this point here? Trend line liquidity. After liquidating the high, we see a new low, or not a new low, sorry, price sees a new move towards the downside. It wicks, taking the previous low, sees a further push up, and then we see a break of structure over here. So I would expect price as doing what? We have a high, then we have a low over here. Why not do this low? This is the noise. This is what we mentioned, that liquidity that we're gonna have in the high time frame, and this is the 5-minute. This is essentially this. Why? Because price is fractal. If you see it, price accumulating orders, price creating a high for liquidity, that push down, breaking structure, coming back up in a bullish trend internally, which means even though we're high time frame bearish, we're gonna see an internal bullish trend. After taking liquidity, what does price do? We shift, we fly towards the opposite direction. And what's happening here on the 5-minute and 1-minute? The exact same thing. We have a high, we have a low, and what we have? That buy to sell for liquidity. Price does what here? Change of character, high, low, you see a push, blah blah blah, new lows. After liquidating these highs, skadoosh, back down. What does price want to do then thereafter? Like I said, we simply just wick this high and we fly towards the downside. So you could have just execute maybe on the low of this candle, sell order, or just straight, ideally on the low of the candle, sell order, say on the 5-minute, and then targeting whatever target you want. But ideally this is your safe target, and that already is a 4-hour setup. Absolutely gorgeous, bro, absolutely gorgeous. And you could have been part of it just by focusing on what price is doing, understanding the bigger picture, not being too caught up on the lower time frames. Because if you get caught up on the lower time frames, taking this area for example, you're going to be selling even though price is bullish, because you're going to be selling because, hey, high time frame is bearish, I'm going to sell. But you're selling where? In discount. That doesn't quite make sense. So you're obviously going to get smoked, and you're going to get cooked. But that is basically the perfect setup, well, not perfect setup, but the hindsight for today, which is Thursday, 2nd of October. A fantastic setup. I think I actually explained that fairly well, and I will post it, and hopefully someone finds knowledge in this. Thank you for watching. Be blessed. Jesus Christ is Lord, Savior of the world, Son of God. Amen.